Hi, it's Adam Hewis, and I'm coming to you from the digital studios of Market Club. And the market we're looking at is the Dow Jones Industrial Index, DJI, on Market Club. We're looking at a candlestick chart, a daily candlestick chart. So this is a daily. And as you can see, I've already drawn some lines in. This is a very, very important line right here. This is a Fibonacci line. It's a 50% retracement at 10,339.07 right there. The market just touched that yesterday, being Wednesday, and then today we're down. But what's also important is this line right here. Now you just barely see it, but what I'm going to do is take everything off the screen. I'm going to scope this out for you to show you how important this line is. So as we keep going out, okay, you can see now that we're going from the highs right here. That's the all-time high for the Dow, and that was in October of 07. Then we had the move down, as you can see, a pretty relentless move down, and then we've had the recovery. The recovery has come back to a very important Fibonacci level, which is a 50% retracement. It also coincides with this downtrend line. This is incredibly important in my mind. When you have the two of them meeting here and the market reversing today, it indicates we may be seeing a more of a pullback, which could take the market back lower than most people expect, or we could just be having another leg down. This is a very important time period also for this market. The other thing we're looking at, and this is much shorter term, I'm going to take everything off the screen again, and I'm going to scope this in because I want to show you this, is an indicator we're using on the bottom of, actually the top here, is it's the Williams percent R indicator. We've talked about this in some of the other movies, but not recently. As you can see, we've started to turn a rollover just like we rolled over here, but this day is, I think, we're on Thursday. It's the 12th of November. I think it's an important day to say that we have, at least in my mind, we have found major resistance in the Fibonacci level and the downtrend line, and we're going to see a pullback. Now, how far the pullback comes, it's too early to say. We don't have a sell signal on this market, but it's important to know that we are reversing down. It appears to be the case both on Williams percent R and also on the Dow itself. So let's take another look at the S&P and see where that is in the cycle. But the Dow hit the 50% Fibonacci retracement level. Very, very important. Don't underestimate that. So let's go to the S&P. So hold on. Okay, we're looking at the S&P 500, and that is indicated with the symbol that we see INX. That's what we see on the Market Club. And we're doing this on the 12th. This is actually during the middle of the day, which is something we seldom do, but this it's approximately 1:20 Eastern Standard Time. Two things I want to show you here. One is this line here. It's a downtrend line from the highs that we saw in 07. There's the Fibonacci 1116.47, got very, very close to that level, and today's action is not particularly positive in my mind for this particular index. You've also got the Williams percent R. There's the indicator. We just use standard Williams percent R. We don't do anything fancy to it, but it looks as though it's turning down, and this action is very important. I want to scope this in even closer because I want to show you something that I noticed and I want to share with you today. So let me just do that. Take everything off the screen. We're going to go closer, and it's just so easy to do. Just click on this little thing, this little magnifying glass. But look at this action. We have had 2 days of what I consider to be imbalances or perfect balances. So you've had a fight between the bulls and the bears here, and you can see when you have a tight range like this, you have a wide move in a little line like this in the middle, it means there's a pretty good balance. It's called a doji line in Japanese candlestick charts. This action today is a sharp down move. We're trading at 1090.11. It indicates that this is an important top, potentially, in my mind, and also this trend line is an important downward trend line. So again, if we take this out, and we just do it very easily just by going to the minus magnifying glass, and we scope it out, you can see it's from the highs that were set back again, very much like the Dow. All the indexes came in at pretty much the same time, and October of 07. We've joined it here. We need, as I say, 3 points. We've kind of got them right here, and I think we'll see this market eventually evaporate. I think there's too much being built into the market. We've had a huge move up here, not unlike 1929, 1930s, when you had a big bear market, you had a big recovery, and then the market started back down again. This is going to be what's going to be very, very concerning to a lot of people. So again, our indicators on the Williams percent R, you can see we've got a little bit of a bearish divergence there, and that indicates to me we're going to see more of a defensive two-way choppy market, probably with a downward bias. We have not had a major sell signal on this market yet, but we're paying very, very close attention. So this is Adam Hewison. Thanks for stopping by. Every success, and thanks for watching this video, and let's see how things play out.